All right, let's just get right into it. 1 minute, Bitcoin is the best performing asset of the entire decade, and the next, it's just total, absolute chaos. We're seeing accounts liquidated, fortunes just vanishing into thin air, and pretty much everyone is asking the exact same question. What on earth is going on? And we're not talking about a small dip here. To put a number on it, we're looking at a staggering 45% drop from its all-time high. I mean, a collapse of this size has shaken even the most diehard investors, and it's got a lot of people asking, is the party finally over for real this time? But here's the thing. This sell-off isn't just random panic from everyday investors. It's much bigger than that. And once you actually understand the forces at play here, the whole market situation starts to make a whole lot more sense. So let's unpack it. So let's break this whole thing down. We've pinpointed 5 key reasons, 5 major catalysts that are driving this collapse. And these aren't just, separate ideas. They're all interconnected, creating what is basically a perfect storm for Bitcoin. Okay, so let's walk through these one by one. First up, investors are going risk off. What that means is, with all the economic uncertainty in the world, they're yanking their money out of speculative stuff like Bitcoin and moving it into safer places. Second, the US dollar is getting stronger. Now, since Bitcoin is often pitched as a hedge against a weak dollar, a strong dollar kind of takes away one of the main arguments to own it. Third, and this one is a really big deal, the new ETFs are actually making the crash worse. See, when investors sell their ETF shares, the fund itself has to sell the actual Bitcoin it's holding. That pushes the price down, which then spooks more ETF holders into selling, and you can see where this is going. It's this vicious downward spiral. Fourth, there's just no more good news. The big, flashy, optimistic headlines have pretty much dried up. And finally, we're seeing a genuine loss of conviction. A lot of investors just aren't buying the story that Bitcoin is this safe haven anymore. They're treating it just like any other risky tech stock. So all of this, it really feeds into this huge central debate that's been raging for years around Bitcoin. Is this thing the future of money, or is it all just a delusion? The arguments on both sides are, well, they're more intense now than they've ever been. On one side of the ring, you've got the legend himself, Warren Buffett. And his argument is actually pretty simple. For an asset to have value, it has to produce something. A farm grows crops, a company makes profits. Bitcoin, in his view, doesn't produce anything. He's called it a gambling token and famously said he wouldn't pay $25 for all the Bitcoin in the world. And if you thought Buffett was blunt, well, his late partner Charlie Munger, he didn't pull any punches either. He pretty much compared it to watching somebody trade, turds, and feeling like you're missing out and have to jump in. For him, it was just pure speculation with absolutely nothing real underneath it. But, and this is a huge but, on the other side of this debate, you're seeing a complete 180-degree turn from some of the biggest names in finance. We're talking about people who used to sound exactly like Warren Buffett. You've got Jamie Dimon from JP Morgan, who went from calling it worthless to his own firm saying it has better long-term potential than gold. Ray Dalio went from calling it a bubble to calling it one hell of an invention. And Larry Fink, the CEO of BlackRock, went from calling it an index of money laundering to launching his own Bitcoin ETF and calling it a legitimate financial instrument. I mean, that is just a seismic shift in thinking. So you have these Wall Street titans completely changing their tune, while the old guard is digging in their heels. With all these conflicting views, it really helps to just zoom out. Because as wild and chaotic as this crash feels right now, if you look at Bitcoin's history, this kind of crazy volatility is, believe it or not, totally normal for it. I mean, let's just look at the track record for a second. In 2011, it fell 99%. In 2018, it dropped 83%. In 2022, it was down 74%. So the experience of watching most of your investment get wiped out in just a few months, yeah, that's not a new thing in this world. It's a pattern that just keeps repeating. And this just perfectly captures the emotional roller coaster. Through every single one of those insane rallies and those brutal 80% plus crashes that followed, you hear the exact same phrase from everyone. This time is different. Every crash has its own set of reasons, sure. But that broader cycle of euphoria, collapse, and then despair, it's been remarkably consistent. So the real question becomes, how do you navigate all this chaos? How are you supposed to think about an asset that inspires this level of genius-like conviction from some and total disgust from others, all while it's on this wild ride? Well, it really all comes down to having a strategy. So here's a pretty rational way to look at it. First, discipline is way more important than conviction. Second, your position size, meaning how much you're truly actually willing to lose, is infinitely more important than some fantasy price target you have in your head. And third, having a consistent approach is always going to be trying to perfectly time the market. Always. This is how you manage the risk and just stay in the game long enough to see what happens next. And all of this brings us right back to the final billion-dollar question. Are we watching the beginning of a real financial evolution here? Or is this whole thing just a grand illusion, fueled by the hope that somebody else will always be willing to pay more? The honest truth is, the long-term story is still being written. And that fundamental uncertainty, well, that's exactly what everyone is betting on.